Good morning and welcome to the ADS Securities Fundamentals Update for today with a busy day of economic figures ahead of the weekend. Beginning with the Asian session today, Chinese CPI stayed at 2.5% in January, while it had been anticipated to slow down a bit to 2.4%, while PPI fell by 1.6% in January compared to 1.4% as expected. During the same session, gold prices passed 1,300 and printed $1,307 per ounce so far, as the latest economic figures from the U.S. suggesting a pause in a QE tapering in March meeting. The U.S. dollar versus the yen also eased back to 101.78, followed by a decline in Nikkei 225 by 1%. As foreign investment in Japan, the stocks fell by 76.4 billion yen in February. Going forward to the European session ahead, we will be waiting for a few but key economic figures today. A Q4 GDP will be released for Italy, Eurozone, Germany, Spain and France. All of these economies are expected to show positive readings. However, falling inflation may lead to disappointing figures today, which may cap the current upside risk in a euro-dollar. Furthermore, Eurozone trade balance surplus is set to narrow to 14.5 billion euros in December, down from 16 billion euros in November. As for the U.S. session today, we will be waiting for Canada manufacturing sales, which may rise by 0.2% in December, comparing to a rise of 1% in November. But most importantly is the U.S. figures for the month of January. U.S. industrial production set to rise by 0.2% in January, comparing to a rise of 0.3% in December. However, we believe that the figures may come in with another disappointing figure due to the effect of the QE tapering, just like what we have seen in yesterday's retail sales and other economic figures for the month of January. Finally, University of Michigan consumer sentiment is expected to rise by 80.6 in February, up from 80.4 in January. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest breaking news, reports and analysis. Have a good weekend.